Okay. Well,
interesting irony.
Yeah, it all comes around. Well, let's change the subject here and move on to an area that you've been following very closely, Patrick. It's Project Merlin here in the UK, which was unveiled recently. And this was this attempt by banks and politicians to sort of reach an agreement on pay and lending and result. I mean, both sides were hoping to achieve specific aims. We're not sure that we've really got anywhere. I mean, there's been months of talking, and then there sort of appears meagre results, or am I just being
4 months of talks, barely 5 pages of text that emerged out of it. Clearly, there were some concrete achievements in that document. I think the one thing we'll come on to talk about, I think later on, is around lending. But I mean, the bonus debate, which was arguably one of the most sensitive topics that this whole exercise was aiming to address, really fell flat completely. There was nothing in there other than a kind of vague pledge to pay lower bonuses for 2010, and it's difficult to judge so far. We've had one set of bank results from Barclays so far, and
where it was a bit mixed, where on one hand the bonus level appeared to go down, but the overall pay...
Yeah, very complicated picture, and I think, you know, on balance they probably did pay less to their people, but it wasn't a clear signal being given that this was an age of austerity. So I think nonetheless, it was very interesting that David Cameron's office was asked for a comment, presumably asked for a critical comment about Barclays' pay, and none was forthcoming. So they seem to be holding their side of the bargain in terms of not criticising.
John, do you think, I mean, you've been watching this for a while, do you think this has materially changed anything between the way banks or finance and government sort of work with each other, the relationship between the two, or is
only in the sense that I think it's much more like the corporate world we lived in the 1970s, and you have bankers going around to discuss things with politicians over maybe not beer and sandwiches, perhaps it's claret. But if you think about why it is that nothing really very much has been achieved, it seems to me that there are two fundamental problems. The first one is that the government is trying to meet conflicting objectives. On the one hand, after the financial crisis, it wants to see bank balance sheets bulk up. It wants more capital in the banking system, and that means that the balance sheet has to shrink, which means it's harder for the banks to lend. But at the same time, obviously, they want banks to lend money, particularly to small and medium-sized businesses. That's a big problem. The second thing is that the bankers just have a lot of power, because in a globalized financial system, they can say to the government, look, we've got to have a level playing field. If you unilaterally impose too much regulation, too much tax, too much whatever on us, then you're going to lose tax revenue, you'll lose employment, and economic growth even may be affected. Therefore, you know, you've got to tread warily. And they've got a point. There is only one country in our system that could unilaterally go down a draconian route, and that is the United States, because it doesn't really matter to the United States how much business their banking system loses. And the United States is not going to do that.
Jeremy, what do you think? I mean, do you think, are we going to see, I mean, one of the things that was hoped that this would address was the end, was banker bashing. I mean, has this, do you feel it's changed the mood at all?
I don't think so. I mean, as long as you have unemployment where it is in this country, it's going to be a touchstone issue, no matter what contract has been written between the government, an informal contract, Merlin, between the government and the banks. It's going to be a touchstone issue. I think most people in the street would agree with that. I had my hair cut the other day, and the barber, the guy cutting my hair, the first thing he talked about was that man at Barclays and how much he's earning. You know, tells you something.
Right. Well, the other question, the other side of the coin was, you said it earlier on, was lending. And I mean, how realistic is this for the government to sort of, I mean, John has said what they want, you know, they express an aspiration, they think that, you know, the economy's in bad shape, you got to lend more, but and was that ever realistic?
Well, they have signed up to make available up to 190 billion of
which doesn't mean it's going to be lent, does it?
It doesn't mean it's going to be lent, despite the spin that some politicians were putting on that pledge. So it's rather an empty promise, really, in the sense that, you know, what happens if they don't get there? They say demand wasn't there, they say, you know, demand wasn't there at the right price, and so on. So to some extent, an aspiration, I suppose, is useful in the sense that it sends the message that banks are prepared to lend, and therefore maybe encourages businesses that might have been reluctant to even try to borrow to actually go to their banks and see what they can get. So it'll be very interesting to see in a year's time where this has got to.
Okay, but I mean, John, just looking a bit further down the track, I mean, in a way, this is just the sort of Act 1, isn't it? Because we've got the Commission on Banking, which I believe is due to report in the autumn, and that holds out the prospect of banks being broken up even, or restricted in some real way, doesn't it? I mean, isn't that the sort of the real thing for the industry?
Well, in the UK, this is where the big stakes really are. And if the Vickers Commission decides that to recommend, for example, that you have much tougher rules on subsidiarisation, you know, how far you've got to ring-fence bits of the bank and so forth, which would increase the costs of running the bank, these are very big, difficult issues. But then, of course, it's for the government to decide what to do on the basis of what Vickers recommends. So I think it's an open question. But I think that what is interesting is that Sir John Vickers made it very clear that he wasn't going to be a completely easy pushover. So there's everything to play for on both sides. I think we're still in for quite a big battle.
I think it's extremely likely that he does recommend some form of ring fencing and therefore imposing some form of cost on the industry.
And do you think the government would then do it?
I think that's extremely unlikely, actually, because not least because they are. I also think, incidentally, that the other side of the Commission's task to look at competition on the high street will lead them to recommend some kind of restrictions on Lloyd's market share. They have up to 30% market share. So I think they will recommend.
Owned by the government.
Yeah, well, that's the point. I mean, the government part owns Lloyd's. They also far more part own Royal Bank of Scotland, which would be hit particularly by the subsidiarisation, so that you break up or you ring fence the investment banking arm from the retail bank, for example. Now that would cost RBS a heck of a lot. It would cost Lloyd's on the competition side a heck of a lot, and that you would be potentially destroying the value of your shareholdings as the government is a shareholder. So I would fully expect George Osborne to kick these recommendations if they come through like that. Absolutely, kick them into the long grass, I think.